Welcome, folks, to the latest rendition of my not quite daily webinars at Epic Street. First of all, I should thank everyone at Epic Street for everything they do, not just here at these webinars, but everything else. The content on their website, the other webinars they provide, including the one that FX Bootcamp Chief Currency Coach Will McDonald conducted last Friday. How many is that for winning an NFP? Something like 60 plus. I think he's done more than 60 of those. Amazing. So anyway, great stuff. Thanks again to all of you who have attended this event in the past and attending today. So let's get started with a little bit of an informal disclaimer. By the way, this is not. I'm not going to provide any trade alerts per se. No specific trade recommendations. We're going to take a look back at what's happened today, trying to make some sense of it. I laugh because wow, what a move today on the euro. And we'll take a look ahead of what tomorrow might bring in terms of news, in terms of possibly a little bit of a technical price action. I'm not purely all about fundamentals or the quant stuff as some traders and even a couple of coaches at Epic's Bootcamp tend to think. I am a technical trader first and foremost. The fundies just guide me from time to time. So that's it. Let's get started. The move on the euro. Is anyone struck by the size of the move on the euro today? Does it just seem like the euro moved maybe a little more than what it normally does? It can't be just me. Pretty big move on the euro today. I've got some data. I've got actually some data, multiple data points to shed some light on that. Some of you may have seen in the past. I think I've done this at least once here at FX Street in a prior webinar, maybe sometime last month, I believe. Ooh, shoot! I forgot to do this. Okay, well I'll show you what I got anyway. This chart isn't completely labeled to my satisfaction, but it's close enough. Okay, let me explain what I'm showing here. I'm looking at, let me give you some context here. I've sensed for quite a while that historically the moves on the Euro-USD currency pair on the Monday following non-farm payrolls, I've sensed for a long time that those moves on the Monday following NFP they lack some direction, they lack volatility. In other words, to put it simply, the euro I've sensed in the past just hasn't moved much on a Monday following NFP. So this was at least several months ago I did this, and actually I think I did one last year as well, but several months ago I started redoing this analysis looking at how much the Euro-USD moved relative to recent volatility as measured by 20-day moving average for daily range. So let me explain what this chart shows you. If you look at the readings from for May of 2009, so in May of 2009, the euro on that day, on the Monday following the release of the NFP report in May of 2009, the euro moved. You can look at the x-axis, the y-axis scale here. The euro moved about 110 pips. Now, the average daily range for the euro at that time, looking at the prior 20 trading days, the average range over those 20 prior trading days for the euro at that time on that Monday in May of 2009, about 185 pips. So again, the 20-day moving average for daily range represented by the little the little gray box, if you will. And that's why I hesitated when I showed this chart, because I realized I missed one piece of notation. I put this together just minutes before we got started here. So let me add a little notation here. I'm going to activate the HawkOn drawing tool. So I'm going to highlight in blue with a blue dot the actual range that day. So again, that the actual range, regardless of direction, this has nothing to do with direction. This only has to do with how much the euro moves. How much the euro moves, up or down, regardless. How big is the move on the euro? Whether the daily candle is a red candle or a green candle, how much does the euro move that day? So on that day in May of 2007, the first Monday, the first trading day after the NFP report released by Friday, the euro moved about 110 pips below the recent average daily range based on the prior 20 trading days of about 185 pips. So my point is, you should be able to see a pattern here, and I'll highlight this. with a yellow marker here. The general pattern for months and months and months and months was the euro would tend to underperform relative to recent volatility. The euro's daily range on the Monday following NFP would tend to be below the recent average daily range, again based on the prior 20 trading days. That has not been the case, and I'll highlight this in red. That's not been the case in the past 3 months and today. Again, the euro's volatility on the Monday following NFP has exceeded recent average daily ranges including today on the past 4 post NFP Mondays. And I guess the point is this: that it has really nothing to do with NFP. It's if anything, it's sort of a message that the kind of message I've been conveying really since at least the early part of August, and I think we were talking about that at this at Epic Boot Camp even in July. Watch Europe. Now, so back in the old days, especially in 2009 and early 2010, when the financial markets were paying more attention to the U.S. economy, and specifically the things like the U.S. NFP report. I mean, you would often see on the Friday of NFP, you would often see a sizable move as the market reacts to the NFP report and its implications for the health, or good or bad, for the U.S. economy. Well, these days, right or wrong, the market isn't focused so much on the U.S. economy. I'm not saying U.S. news can't move the market. It's just that, at least in my perception, and I have at least some data like this, for example, to back me up, and this isn't the best example of the data to back me up on this, but it's been my perception that just watching volatility in response to, or let's just say lack thereof, or lack of volatility in response to U.S. news reports of different kinds, the market just isn't moving much in response to U.S.-related news. It seems to be all about Europe right now. Whether you like it or not, it's all about Europe. Watch Europe, watch Europe, watch Europe. That's been my catchphrase, if you will, since early August. So anyway, today was already an unusual day from that perspective. And we've had historically the post-NFP Monday is known for low volatility. Not the case for the past 3 months. Not the case today. Gam, you may be right about that. I don't anticipate that this is today's move, for example. I don't anticipate that it's QE3. Let me rephrase that. I don't anticipate that it's primarily QE3 driven. As I see it, it's primarily the hopes, and I think it's more hope than anything else, but hopes that Germany and France are going to come with something, or at least something better than what's already been derived by now. In terms of, bank recapitalization is the catchphrase right now. Markets are wondering how much, if anything, the Europeans will do to recapitalize their banks, and and even that talk right now seems to stem from what seems like all but expectations that Greece is going to go bankrupt, and there's a prospect of Greek bankruptcy and what it can mean to the Eurozone banking system. It seems to me, as I see it, the primary reason why there's so much chatter now about bank recapitalization in Europe, because the Europeans and my best guess, the Europeans want to delay the day of reckoning for Greece as long as possible, so they can get some of the banks recapitalized to better cushion the blow for them. That's one theory. So let me go back to the. So you've got that. Again, historically, the Euro-USD has not moved much on the Monday following NFP, but in recent months it's been an exception. So that's one point I want to make. Another point I want to make, it relates to the Commitment of Traders report. The bar graph you should see in a moment shows the relative positioning in the futures and options market as assessed by CFTC based in the U.S. Relative positioning of so-called non-commercial accounts. It's a pretty good proxy for hedge funds, large speculators, mostly hedge funds in this case. So this report from the CFTC, I'm showing this is a graph summarizing parts of the report especially for the euro. This is again a decent proxy, not perfect, but a decent proxy for hedge fund positioning in the futures and options market. So here's my point. Let me get the Hawk-on drawing tool again, and we'll explain a bit about what this means. Let's draw a horizontal block line in the middle of this chart. Not too bad for a freehand black line there. I've done better work, but that's pretty good. So here's let me make it simple for you here. When these blue vertical bars are above the black line, hedge funds, again, this is a proxy. It's not perfect, but hedge funds, you could say the hedge funds are more bullish than bearish on the euro when these blue vertical bars are above the black line. And when they're below the black line, they are bearish. Now, you might notice, and I'll highlight this, I'm going to take a different color. Let's pick a bright red. You might notice how bearish the market got in the first half of 2010, how bearish the market got on the euro. Pretty bearish. In other words, hedge funds and other speculators really loaded up on euro shorts in the futures and options market. And the market only changed, the market only started shifting in sentiment when you saw the likes of the rescue fund created and announced in May of 2010, and of course the ECB launched its securities markets program. So Europe did something. There was some move made to help backstop Greece, and of course the hope at that time was to potentially backstop other smaller sovereigns in Europe with the rescue fund, and so that eventually changed the tide for the euro bears, and some euro bears after that started covering some shorts, and then we started shifting the speculation from that or attention from that towards the prospect for QE2 by the Federal Reserve, which the Fed in fact did announce in November of last year. I'm sorry, November of 2010. So that brings us to the present. Well, look at the degree of positioning just recently here. Not quite. Let me draw a horizontal gray line to emphasize this. Not quite the same degree of bearish positioning on the euro as what we saw last year, but not too far from it. This is one way that when you hear commentators on TV talk about a crowded trade, maybe sometimes it's markets crowded into trades for a particular individual stock, or maybe the market's crowded for a particular currency. Well, there's an argument here. There is an argument here for the euro bear trade being crowded. Historically, we're near historical extremes for how bearish the so-called non-commercial accounts have gotten on the euro. They've been more bearish, but not a whole lot more bearish. So in this context, when you have a so-called crowded trade, and then when you have something, in the case of today, some news which could have prompted at least some speculators, some hedge funds to cover shorts, to take profit on those short positions, you have a formula there, a crowded trade plus some form of a catalyst, if you will. You have a situation ripe for a fairly big move. As I see it, that's what we got today. Now, I'm the first to say that I call for this move. No, calling for the end of in this case, what's been a very bearish move over the past several weeks is very, very difficult to do, folks. I mean, it's anyone's best guess when a bull move can top off and then at least start a correction, or when a bear move like what we've seen on the euro lately can turn. It's always a guessing game. It's always a battle for the counter trend traders, in this case the euro bulls, to identify the proper bottom. So it's not an easy thing to do. Not an easy thing to do. In fact, as I see it, it wasn't easy at all to do today, considering some of the other data we saw released earlier today. For example, the level of funds deposited by Eurozone banks at the ECB and the ECB's deposit facility, something like more than 250 billion euros parked as of today at the ECB's deposit facility. That's the greatest number since, I believe, July of last year. And that is a sign of continued stress in the Eurozone banking sector. Now that level may drop a bit tomorrow as we look at the numbers from the ECB out around London Open tomorrow. We may see those numbers drop, especially in response to these rumors, and maybe that's all they are right now is rumors that the Europeans, specifically the Germans and the French, can come up with a viable solution, and the market will take a liking to. But my point is this, and I can show you some other measures, but I want to keep it simple. I want to keep it fairly short, and my time is limited anyway in terms of these webinars. I'm limited to 45 minutes, but let me put it this way. There are still other signs of stress in the Eurozone banking system, for that matter, even the global financial markets, suggesting that that by no means is it safe to call the all clear when it comes to the Eurozone. Now, who knows? Maybe this is a significant moment of truth. And, today's price action, if anything, on the euro suggests that at least this could be, it's at least remotely possible this is a turning point for the euro. If you just look at the size of the current size of the daily candle, and let me show you another chart here. I saved another chart on a different platform. Where can I find that chart now? And by the way, I'll get to the euro trade in a moment, but I want to show you wanted to show you some of this data here. This is a daily chart for the euro showing price action from January 11th of this year through today. Now, this I believe I captured the image of this chart because I wanted to have a record of it. I captured the image of this chart a little more than an hour ago. The euro did make a higher high for the day than what I show in this chart, but as we just last checked, the euro is now below that. So where are we at now? 36.68 or so. So we're at 36.68 on the euro. At the time that I cast this image, the time that I recorded this image, the euro was near its high for the day, which at the time was around 36.90 or so. So here's the point I'm trying to make. I'm trying to give you some perspective in terms of the size of the today's daily candle. Let me activate the Hawk-on drawing tool and give you some perspective on that. So I'm going to mark with a red marker on the right-hand side of this chart the high and low. Oh, please, I hope this thing works. There we go. So I've marked with the red marker the high and low for today. Big green candle today. Let's put that in perspective. That's bigger than any green candle I can see on this chart. In fact, it looks bigger at first glance than any, almost, not quite, but almost any red candle I can see formed this far this year. Some of the biggest moves on the euro, one that strikes me, and I believe this was the one that was really striking. This was the day that the Eurozone officials came up with I shouldn't say just came up with, but they announced that agreement. I believe this was the July 21st announcement of really what was arguably the latest meaningful plan or change in plans from Eurozone officials. We really haven't seen anything new from the Eurozone since then. There's been talk of plans, latest talk that came up over the weekend, which seemed to spark this move up today. Latest talk is about recapitalization of Eurozone banks, which certainly is necessary. But in terms of especially in terms of details, as I see it, details are lacking right now. We have no sense of details on plans for, you name it, recapitalization of Eurozone banks. There's been talk about ring fencing and, who's going to pony up what in terms of, look at the rescue fund. Is the rescue fund going to get ramped up in size? By some estimates, there's a think tank today, for example, in the Eurozone. A Eurozone think tank, the name escapes me, I can look it up though. Eurozone think tank believes that, the so-called rescue fund for the Eurozone, which has not yet been approved to be bumped up to 440 billion euros, but it probably will be by the end of this week by Slovakia and Malta. But anyway, that rescue fund is just now being approved, in the process of being approved, to be bumped up to 440 billion euros. A think tank in Europe announced today, and they're not the latest kind of firm to say this, that rescue fund probably needs to be about 10 times that amount. I've heard estimates of 2 trillion euros, 3 trillion euros, 4 trillion euros. I believe the Boston Consulting Group suggested that the Eurozone Rescue Fund needs to be up to 6 trillion euros in size. Oh, by the way, I'm sorry for you Europeans. I don't think it seems like the media, especially the Financial Times, doesn't use the word trillion. So maybe let's put it in I guess maybe in European terms. It seems like the Financial Times likes to use thousands of billions instead of trillions. So what would that be? This think tank in Europe said it would be what they estimate 4,000 billion euros size of the rescue fund and what it needs to be. So I mean, here's my point. We have what looks at right up to the moment to be a massive short covering rally. Massive short covering rally. It does happen. By the way, today's move, and today's not over yet, at least in terms of the by definition of the, if you define the day as Asian Open to Asian Open, the day isn't over yet. But as measured right now, I believe this is the biggest move we've seen since summer of last year on the euro. So in that context, in the near term, it's safe to assume until or unless we hear something different from Europe, it's safe to assume that the mood for now is euro positive. So let's take a look at the euro here. And correspondingly, you could say dollar negative or you're risk on, really, risk on. The Japanese yen did weaken today. And, of course, the Swiss franc is doing what Swiss franc does, which is kind of its own thing right now. As I saw it, trading the euro today, you had to have a pretty darn firm commitment that this was going to be a big day. And as I saw it, that was a tough call to make. Essentially, you had to be aggressively bullish today on the euro to profit from the moves, especially the moves during the New York morning session. And that was after the euro had well exceeded its recent average daily range, and it was nearing its weekly M4 pivot point, which is very, very rare. It happens, but it's extremely rare for the euro to reach its weekly M4 pivot point on the first trading day of the week, and we did that today. So let me go to a short-term chart without indicators. And simply put, some of your best opportunities to go long on the euro is when we get these little consolidation phases like I'm going to highlight in the middle of this chart. I'm activating the hot-com drawing tool again. So we had a phase. Actually, let me deactivate hot-com for a moment. I want to move the chart to size so you can see the scale, the x-axis scale on the chart. And I want to zoom it out too because the London session low down here, that was not far. I'm going to call it 3460. The horizontal black line in the bottom of this chart, that was a London session high and post-NFP low established by the euro during Friday's trading sessions. So again, I can zoom in on the 15-minute chart. You can see that better. So let me make that a blue line so it stands out better. And I'll make it thicker too. So I'm going to use two red arrows to highlight on Friday's London session high and the post-NFP low. See that? London session high, post-NFP low, near 3460. So in that context, that was the case, and this came together right around London Open today. In fact, almost right at London Open, you get a chance to go long at a level, at a near level, I should say, that was important on Friday. Other than that, what do you do with this? What do you do with this? I'm going back to a 5-minute chart and zooming in a little bit. One way to do this, of course, I don't show in this chart, but you can always buy on dips to sources of or to moving averages, what I would call sources of dynamic support in this context. 5 EMA on a 15-minute chart is a classic example, and buy dips to the 5 EMA. Well, sometimes you get price action, like what I'm about to emphasize with the HawkOM drawing tool here. You get let me get the red mark going. You get what you could argue is a little pennant pattern going here. This is a 5-minute chart without indicators. Now I know there's some so-called forex experts, not just forex, but even in other markets, talk about trapping price, something like that. By the way, the upper part of my trap leaves a little bit to be desired. Not the neatest, cleanest, straightest line I've ever drawn, but I hope you get the idea there. Some traders, oops, hang on a minute. I'm trying to redraw this. Hang on. Wow, HawkOM drawing tool is going crazy on me. Well, let me draw another horizontal line in this chart. That's the bottom of the trap I just drew on with HawkOM drawing tool. And these, for the more aggressive bulls, are your buying opportunities. One example here, buy around 36.15-ish, 1.3615-ish. And we saw some hesitation earlier, prior to that, around 1.36 psychological level, which is represented by a horizontal black line in the bottom half of this chart. So one simple strategy is just, you never know how aggressive or not the move's going to be. You never know how big of a day it's going to be for the euro. But, one simple way to trade this, you get some evidence of hesitation around 136.10. You buy on another dip to 136.10. Exit strategy, get out on a break below, a few pips below 1.36. You're not risking much, and potentially you can catch the last piece of, what could be a big day for the euro. I admit I don't tend to like doing such things. Without a good reason, I don't like betting on, record-breaking days, which today arguably was. Now, it wasn't the biggest day ever for the euro, but it was a 1+ year record day in terms of how big this euro moves. In that context, I don't like betting on exceptions without a darn good reason. But there was certainly a case for a relatively conservative long there with reasonably defined risk. And let's just questions on other pairs. I'm going to limit my analysis to that because that was, again, the big mover of the day by far, the Euro USD. Obviously we see correlation with other currency pairs as well. The Aussie USD, as I recall, checking last did fairly well, so one could have traded the Aussie as well. But the story of the day. The story of the day was prospect of a plan. And that's all I see that for now, a prospect of a plan for capitalization of the Eurozone banks, and it gave lift to the euro today. And the euro rose today, not entirely necessarily, but largely on short covering. The market was heavily short on the euro, and we had a bit of a short squeeze there. So what now? What next? Well, given the magnitude of the move, if you look at let's go look at a daily chart now. Actually, I'm going to look at a different daily chart, one without indicators. One without so-called primitives. Sound check. Is anyone still with me? Testing 1, 2, 3. This crowd can be a bit quiet, but this is notably quiet today. You know what? I went through I did a bit of a speech today in my live coaching session at FX Bootcamp, and I'm not saying that not everyone should talk all the time. In fact, it would be a bit overwhelming for any so-called expert at these webinars, or even for a coach at FX Bootcamp to be bombarded every minute of every session with questions and comments. But I must say this: I don't know if all of you fully appreciate how significant some of these moves are. I really don't know how many of you can appreciate it. Now, I understand if you're newer, you won't have any basis for comparison, any perspective on this. But folks, we were just talking about this last week too, and even the week before, and some of the boot campers were saying the same thing. They tend to agree with me. Not that I'm not always right, but my perspective is this, folks, and this is something, I guess, if anything, supportive of FX Street. I appreciate what the kind of things that FX Street provides in terms of the content, in terms of, what's happening in the markets and webinars like this. Folks, I don't see that there's ever been a better time to be a foreign exchange trader, ever. These are historic moves. These are historic times. I personally believe that years from now, 5, 10 years from now, maybe even longer from now, we, at least many of us here, maybe some so-called experts, 5 or 10 years from now, and historians, I think we're going to be looking back on this time, like right now, like days like today, thinking, wow, Maud or Frank again, remember that move? Remember that move that day on October 10th, or that move in October when the euro rose like 400 pips? This volatility could very well continue for days, weeks, months to come, but I'm telling you, folks, I remember just like it was yesterday, the days back in like June of 2007 when a month after I first became a currency coach at FX Bootcamp. I remember that day, or those days, I should say, when the euro would barely eke out 60 pips. Barely eke out 60 pips. And we found a way to make money from that. And now 60 pips is like it's a rounding error. It's shocking to see a 60 or 70 pip day on the euro these days. If you're newer to trading, you cannot appreciate how much these markets are moving right now, and how phenomenal these times are for traders. And by the way, not just traders in the currency markets, but traders in other markets as well. This is a phenomenal time to be a trader. So in that context, sometimes I'm rather shocked that there's no more questions, no more comments about what's happening. It's amazing, and I feel like we're living through currency market history, and yet people are so quiet. But I don't want to sound to be critical here. I'm not trying to sound to be critical. I'm actually just, I wake up every day just kind of, my jaw drops sometimes, thinking, my gosh, look at what we're living through here. These are quite the moves in currencies. Anyway, I want to highlight. I do want to highlight before I move on here, and I see your latest question, Solomon. I do want to highlight we talked about the prospective top for the day on the euro. This is on a 4-hour chart. Yeah, here we go. I'm looking at the tops. This is a 4-hour chart without indicators, and I'm looking at the tops. The top is established in the middle of this chart around late September 27th, 28th, and 29th. We talked about that 3680-ish area as being the highs for the day, defining the highs for the day. Well, the euro happened to get pretty close to 1.37, but you could argue that 3680 zone did, in fact, as it turned out, define the high for the day. Although it is interesting that as the euro got there, we basically got to the end of European trading day, noon New York time. So, end of the day plus some recent highs established late last month on the euro. Made a lot of sense. The euro has finally given up its run. Solomon, here's my point, Solomon. I'm going to go back to I want to go to a daily chart, and even this daily chart can't give any perspective. Well, Solomon, here's my challenge to you and everyone else listening. Unless there's one exception to this. Actually, in recent times, I see one exception to this. These moves that we saw especially in early August on the euro. I don't know if anyone remembers those moves. We would see the euro would be 200 pips up one day and like 250 pips down, or vice versa. Some sizable moves on the euro in early August. Some up, some down. The euro would literally flip-flop from one day to the next, or flip-flop from one session to the next, in big moves. That is unusual. That's unusual for that to happen. Unusual for that to happen. But it can happen. So my point is this: I can envision an extension of this move, because historically, when you get a move this big, you'll usually get some kind of extension. In other words, I challenge each one of you to look at your daily charts and go back in time some 3 or 4 years in your daily charts and look at each move on the euro that's been at least 300 and 350 pips in magnitude. When we get moves like that big, it's very rare for the euro to flip from up to down and just keep going down. Now, I will say in times like this, and given the I think it's still present threat of the eurozone, going south or getting things turning bad in the eurozone fairly quickly. I mean, it is possible. It's possible. What if Slovakia rejects the EFSF changes? I don't know. Maybe that's going to be a bit of a catalyst. It's possible. What if we have rumors of another bank going bust in the eurozone? That's always possible too. But barring any new news like that, barring anything unexpected, it seems safe to say that the euro has at least begun recovery. That could very well continue. Now, does that recovery continue first thing tomorrow? Probably not. I would say we're due for a retracement. It could be the Asian session, maybe even London session traders sell the euro more than they buy it. But at some point, whether it's tomorrow's New York morning session, maybe it's Wednesday, I would guess this move is big enough. This move is of a magnitude big enough that we're probably going to extend higher to some degree. Until or unless something changes news-wise. What I would find interesting is that you see this blue trend line on this chart. Well, I used it to define a channel recently on the euro. A retest of the top of that channel, I would think would be interesting for longer. I just don't know if we're going to see a retracement that big. Zoom out. I'm going to actually go to a weekly chart here for the euro. So I'm going to talk about what I see what could be even more significant selling opportunity for the euro. So I've got some other lines in my charts. Ignore these other lines for now. I'm going to draw one thick black trend line. This is a weekly chart going back to really early 2010, actually late 2009. Something like that black trend line could become or could prove to be the next ultimate selling opportunity. Does that mean you can't sell the euro until we get to that black trend line? No, it doesn't mean that. What I mean by that is that if we see a bigger relief rally than what many think, that could be the next great selling opportunity. And another one, obviously, at 1.40. I recall some hesitation around 1.40 during the sell-off earlier in September. 1.40 like to draw some attention. And of course, you could always zoom in on this chart now. And I'm gonna drop some of these lines so you can see where I'm going with this. You can always apply a fib setting to the move down from the late August high to last week's low. And look at that. Isn't that interesting? Anyone knows where we are? The 38.2%, let me throw a couple arrows in this chart to talk about, to describe what I'm looking at here. Yeah, 38.2% fib, Frank, correct. So I've just shown a Fibonacci study of the move down from the late August high, that high around 1.4550-ish, down to last week's low, that low just around 1.3135-ish. The 38.2% fib retracement level of that move down is represented by a horizontal black line. I have the 38.2% fib at 1.367778. Now it could be different on your platform. Again, different platforms, different brokers have different, slightly different prices. But consider this: that's a 38.2% fib of that bigger move down. Plus, I mentioned earlier the 3680 area was seen to be a sort of a zone of resistance late last month. Now, what I said earlier, I still stand by, which is that the magnitude of this move is such that it seems a very good chance it could continue up a little higher. But let's think of it this way. As I got 4 minutes to wrap it up, I'm going to think of it this way. It wouldn't surprise me if we see something like this. A slight drop during the New York afternoon, which is we're in right now. Right now we're in the New York afternoon. I can envision the euro dropping a little bit and then rising up to retest this 3680 area. Now, I can imagine based on, let me go back to the 4-hour chart. Let me zoom out on this chart again. I can imagine based on prior visual resistance late last month, plus that 38.2% fib, based on those two factors alone, I can imagine a few bears giving it a go and taking a shot short on the euro. If only for a spot trade that could last at most an entire session. I'm not saying that's all it's going to last. I'm saying that may be the viewpoint of traders who look for a short on the euro sometime, say around. So here's my point. I can imagine the euro dropping a bit during the New York afternoon, rising during the maybe the early part of today's Asian session, and then topping off at around 3680-ish, give or take a few pips, obviously, and then dropping from there. And maybe either London or New York session traders will start buying up the euro again tomorrow. So I don't know if that makes any sense. I'm actually talking about Asian session and or London session going against the recent flow, the flow which was up today. And at some point tomorrow, maybe not until Wednesday, we get another set of buyers looking to jump in. Again, betting on again that the betting that Europe's going to starting to get its act together and doing something, making a step in the right direction in some way. But again, for at least a couple reasons, that 3680 area looks interesting, looks significant. Of course, the market managed to break above that over the next several hours or during today's Asian session. All bets are off, and then it's a whole new ball game there. All bets are off in terms of the euro bears in the near term. And that just about wraps up my scheduled time today. So again, an exceptional day for the euro. I mean, no question, the euro is the story today. What I find notable is I'm watching CNBC take off some various readings on the financial markets, and I'm looking at the yield on the 10-year T-note, 2.07%. I don't believe, I should check, I don't know, but I don't believe that the yield on the 10-year T-note has made a significant, had that much of a significant rally since Friday. We were above 2% on the U.S. 10-year T-note on Friday, and we're not far above it. We're still not far above 2% on the U.S. 10-year T-note. So, my point is this: if I were to believe this euro rally has legs, like this is the start of something significant, I would expect more money flow out of treasuries than what we've seen just today, for example. But I don't know. It can be. Maybe we'll see a delayed reaction on treasuries. That's not common though. It's not common though. One rule of thumb amongst credit analysts and credit traders: credit anticipates, equity confirms. Credit anticipates, equity confirms. Another way to put it: the bond traders are amongst the smartest of the bunch. It's that the bond traders can get it wrong, but they get it wrong a lot less than other types of traders do. And that includes currency traders. So again, if this was the beginning of good news, of a lot of good news, I would expect to see much more of an exodus out of U.S. Treasury market, and maybe it's just a matter of time it'll happen, but not a huge spike up in 10-year yield, at least just yet. By the way, one interesting note, I'll end on this. There was and the Zero Hedge blog pointed this out, and I credit them for this, and I did the research myself and confirmed their own research, and that is this, and take it for what it's worth. Over the past 5 weeks, according to the Fed's H.4.1 report, over the past 5 weeks, there's been a virtual stampede of money flow out of U.S. Treasuries by foreign investors. Could include central banks as well. Foreign investors have withdrawn money from U.S. Treasury securities to a degree not seen since August of 2007, when the U.S. subprime mortgage crisis got going. So I'll leave that for all of you to figure out, or I can talk more about that tomorrow. But here's the point. I guess the lesson for you currency traders, current or wannabe currency traders: pay attention to money flow into certain markets, money flow out of markets, not just money into and out of currencies or currency pairs per se, but money flow into and out of other financial markets. That's a lot of money, a lot of money flowing out of U.S. Treasury securities in a very short period of time. Again, last time this happened, a lot of money flow into or out of Treasury securities. Well, 2 times it's happened recently. We saw a lot of money flow out of U.S. Treasury securities at the advent of the subprime mortgage crisis back in August 2007. We saw a lot of money flow into U.S. Treasury securities just a month or so after the bankruptcy of Lehman Brothers back in 2008. Again, just the opposite, actually. Just the opposite. One school of thought is that the Fed's trying to spook everyone into riskier assets, such as equities. In fact, Federal Reserve Chairman Ben Bernanke has specifically cited that. And in multiple interviews, Bernanke has cited, especially when asked about the QE2 program, the second quantitative easing program announced in November of last year, Bernanke cited specifically the rise in, I think, the Russell 2000, a notorious small cap stock market index in the U.S. He specifically cited a rise in the Russell 2000 as evidence that QE2 was working. Yeah, it's close, but there's still some action in futures. Is my point there, Erwin. Yes, I thought there was. But I gotta admit, you're right. I got almost forgotten about the holiday today. There was a banking holiday, so you make a good point. So maybe we'll see some of that if we're going to see a flood out of some bond markets. We'll see more of that tomorrow. At least when it comes to treasuries, more of that tomorrow than today. You know what else noticed? Sorry, I'm running over time. On this note, last I checked, I haven't checked this recently, but last I checked, the European equities weren't up that much. I'm going to go into a website that'll give me a read on that. I'm checking the what's called a global macro map provided by the Financial Times on the website. Well, the DAX is up 3% today. Germany's DAX, Germany's main blue chip stock market index, up 3% today. The CAC 40 up a little more than 2%. You know, let me put it this way: could it be the establishment of a bottom of some kind on the European equities? It's possible, yes. I would have expected bigger moves than that. We've seen a lot more volatility than 2 or 3% moves in European equities of late. So that's not an overwhelming move on European equities, but remains to be seen. So, folks, I hope the time spent here was helpful. Hope you learned something, and we'll do this again tomorrow. We'll start tomorrow's webinar at 1 p.m. New York time. I'll do this tomorrow. I'll do this Wednesday, and then at what time is it going to be? Essentially Asian Open on Friday. We'll do this again. At least I assume we will. Depends on what FX Street wants to do. Thanks. Have a great day, folks.